Good evening, everyone. My name is Henry Gamble with SimplerOptions.com, and this is the free video for Tuesday, June 16th. We're getting started shortly after the close here on Monday, so the markets are closed, and this is just essentially the outlook that I'm trying to provide for tomorrow and more so into the end of the week. A couple of places that I wanted to start, and kind of the focus for today's free video is just how I use Fibonacci work in some of the most recent examples or some of the most current markets. So to start off with, crude has been a market that I've been looking at for quite some time, primarily because of the daily squeeze. I know within the broad scope of this, it's still a bearish trend. Of course, it's already had a big short side move, and I am conscious of that. But at what point do I feel that this crude level here at 60.56 is going to give me a more viable sell signal? Well, off the daily chart, there's definitely a few swings that you could analyze, but if I really want to try and perfect my fib work, and especially since we've had a rollover that wasn't too far back, I like to drop down into the exact current contract. Just kind of one of the things with futures that might make your analysis a bit simpler. When we're looking at the daily chart, here again, there's a lot of swings you could work and you could see these levels, but I like finding situations where when you drop down into an intraday time frame, it might give you a slightly different perspective on some of these moves. So if we come down to the 2, or let's actually look at the 4-hour chart, because even that, you're not going to get a whole lot of bars inside of a daily session, but it does at least break it down a little bit smaller than what you might see on a daily chart, obviously. So what we're doing inside this pattern, and this is a very basic way of using fib work, it does not go back to a lot of detail, but just these two levels will show you how important it can be. What I am looking at, because I'd like to see it break down, so I have to think counter trend. Okay, if it breaks down, what level do I need to see it break? I like to see in this case, what would be a bearish exhaustion swing. That's what I want to see continue. I like to project that from the most recent high, so you can just see the similarity there in those two patterns, and there again, that high wouldn't be as easy to see if you were just using the daily chart. Then inside that, I also like to run a retracement of our most recent swings, and if you combine the two of them, so there again, high to low, from the low that was made before we started to resume the rally, projected from the high, you can see that gives you a low there at 58.71, and the actual low is 58.73. So symmetry in and of itself can be very powerful. And then when you get that level to coincide with the retracement from your swing low to swing high, you can see how that very close confluence gave us a very nice target. Now that that has been hit, that was kind of the short-term short trade, and now I would run similar work to see if we can fail from resistance on the way back up. But if you are bullish on crude, that's an area that you'd really like to see hold. If you're bearish, hopefully we don't exceed these previous highs, fail inside this zone, and then we can look to play the daily squeeze. A couple other tickers that I've been following along with in the evening videos, especially on the free side, trying to kind of go from start to finish, was here with JD. Now we've got a lot of different levels on JD because we've been trading it very extensively. But the main thing you want to point out here is exactly the same type of study, where from a previous swing high down into that major swing low and projecting that up, you can see how that gave us a target here at 38.01, and the high was 38. So you're literally talking about to the tick in a $38 product, and that's close enough for government work. These are the areas that you really want to be conscious of, because inevitably it feels like those are the best places to buy. If you're conscious of these extensions, not only may you be able to sell something against a bullish position, it just tells you a place where it's good to take profits at the very least. So that's been a good follow through on JD. Where might we look for something where we can apply this fib work in a current environment? And I find that here in Cyber. Now Cyber had a huge day today. It was up 7% at one point, and I tried not to buy anything on the day if it's up more than 2%. Now that's a very conservative rule, but it's just something I like to stay inside of. Tomorrow, obviously, we'll see where it opens, but we could look at some fresh perspectives on it. There are two key fib zones that I would keep in the back of your mind as you run this work. The first one, I always like to think from the broad perspective, where if I broke down to a weekly chart, what swing lows might I find, or swing highs and lows? And here we're going to be using these. So all I would do is take this high that we made back here around 70.48 and run that down to these lows, and this is helping you know, is this too late to buy, or do I still have a little bit of room into my overhead extensions? Well, that move would take you into about 76, 73. And then if we ran the micro level as well, zoom in a little bit for a more detailed view of that, and that's going to take you to about 73.84. So the way I use these is if you really are a momentum trader and you're focusing on short-term aggressive trades, well then look for that 73.84. You know, if we opened up down tomorrow and you could buy something for a quick $2 move, I think that's a great trade. If you prefer to give yourself a little bit more of the gift of time, well then step out into a further dated contract and look for these broader extensions. So that's a follow-up on some of the ones we've been covering, some that I think are still in play. Hopefully you can tie those into your trading and it will help you with your future setups. I also wanted to make sure you guys were aware of a webinar that John is going to be doing tomorrow. That is on June 16th at 8 p.m. Eastern Time. The main thing that he's looking for in this one is income versus growth. How to double your account before it goes to zero in 12 months or less. You can see the rest of the bullet points there, but I always find a lot from listening to John, regardless of the topic, especially if it's free. I find that I always pick up something that is worth adhering to. So if you guys want to check it out, that's when we'll be doing that. I hope to see you there. And if nothing else, I will touch base with you in the next free video.